One interesting stat, if you look at millennials, there's more millennials on Robinhood than Schwab, Fidelity, E-Trade, and Vanguard combined. And what we believe is over the next few decades, there's going to be a massive wealth transfer. It's starting to happen, but it's going to accelerate, of trillions of dollars, tens of trillions, from baby boomers to Gen X to millennials. And I think Robinhood can be the largest beneficiary of that, and we're putting ourselves in a position to do that.
All right, Vlad, thank you so much for joining us today. As Ali mentioned, 11 years at the helm of Robinhood, and so much has happened in that time. We were just lamenting that we're the geriatric millennials in the room. We actually are both DC area kids, graduated high school, I think, the same year, and yet you are running a giant company called Robinhood. In 2021, it was hard, really, really, really hard to be the CEO of your company. There was GameStop mania and Roaring Kitty mania. You had to raise $3 billion in 36 hours to meet trading demand. You had to freeze trading for a little bit. Customers were angry. You got interviewed by AOC. You got interviewed by Elon Musk. Movie was made. You were not portrayed great in the movie. So that's crazy to live through as a CEO. I just want to hear from your perspective, like, how hard was that period?
Let's see. I think one of my weaknesses, I haven't had a job interview in a while, but sometimes I think through what I would answer these questions that I ask people, and I've heard it described, my weakness, which I think can also be a strength. Our strengths are our weaknesses. I have this pathological steadiness. So I might not emote very much. I don't get very excited about things. I don't get terribly distraught about things, which can really be off-putting to people in some ways, but I think can be a strength because when you're going through a crisis, I just and it probably started out from me being an immigrant, and my parents came to this country when I was very young, and I was a latchkey child, like some millennials. Now people can't imagine, having their kids go home from the bus stop half a mile and being home alone. But both my parents worked. We had no option. And so, I don't know, that my childhood was not easy, and there was this constant threat of if we don't make it in this country, we'll have to go back to Bulgaria where there's hyperinflation. And so it was just constant struggle. So I think when GameStop happened, I was kind of prepared for that. And
you actually had thought exercises, though, of what if my board were to replace me? What if some Hollywood typecast guy came in and they were you're the new CEO of Robinhood? And that's hard self-reflection to do. And what did you come away with? How did the company change after that?
Yeah, I think that's a good, it wasn't it wasn't so much thinking about the board doing that, but more, this was 2022 when things were rough. And I think everyone just thinks about the GameStop era and COVID and that being the toughest moment in my experience running Robinhood. I actually think in a lot of ways 2022 was harder. The entire market turned. We went from zero rate environment to high interest rates, highest inflation we've seen in decades. People just weren't interested in trading stocks anymore. That became undesirable, and a lot of capital moved away from sort of the higher risk equity markets to lower risk bonds and just collecting yield on cash. And so Robinhood's business had to fundamentally change in order for us to stay relevant and kind of thrive in this new environment. And that was very tough. We had to make a lot of tough decisions. The company was carrying too much headcount. We had to refocus. We had a lot of bets in various directions during COVID. We had to really refocus on the core business. What I found was useful was, everyone says don't talk about the stock, but our stock hit a high of 75 in 2021, and it traded below $7, a year later. So that was tough for a lot of people. And so I think self-reflection and asking yourself, well, if I wasn't here and they brought in a CEO from Central Casting to get this company on the right track, what would they do? And I think this was useful for me to go through because there's a lot of decisions that we hold on to because we made them earlier, right? And you don't want to appear inconsistent with your earlier self, and so you can end up kind of holding on to the wrong decision for a while. So one example was we announced we were a remote first company in January of 2022. We had kind of like hedged our position on this for a couple of years. We were telling employees, hey, just wait after we get a little bit more clarity on this COVID situation. We'll kind of announce what the future of work looks like full time. And in January 2022, I kind of got tired of having this debate, and kind of all the signals around me were we should go remote first. The market is demanding it. There's a war for talent. The best talent wants the flexibility. So we announced it, and I kind of immediately regretted it. But at the time, it felt like a very difficult thing to pull back. Companies who hadn't announced that were having a hard time getting folks back into the office and normalizing that. So yeah, that was an example of one of those decisions where I was like, okay, if someone came in with like fresh eyes, kind of without the burden of being consistent with decisions you made 6 months ago, they probably make this change. And so that I think unlocked a lot of me, and that deep self-reflection, I think, allowed us to go down the list of the 10 things that had to change about the company very, very quickly to not just survive, but thrive in this new environment of higher rates, less interest, and more speculative equity investing. And I think that really accelerated Robinhood's transition into being a public company.
And so the stock today is 28, so not quite at that 75 high, but way up from 7s. And also you had really good recent earnings. I want to point out that this time last year, this quarter last year, is a net loss, and your net income is like 157 million now, so quite a swing. Part of that, I think, has been a better interest rate environment and a lot of income, interest, cash, but you've also gone to pains to really diversify a bit more away from the hyperactive trading that has been the core of the business. I'm curious how some of those, like diversifying your business model, how those efforts have gone. You've launched a credit card, There's retirement options, and a lot of that has just rolled out this year. So what's that doing to the business, and how are those early products going so far?
Yeah, so when we kind of like re-articulated the strategy in 2022 and kind of like refounded the company, we did a couple of things. And I think what made it hard was the top two priorities were like somewhat diametrically opposed. So the first thing that we did was we actually really focused on the core of the business. And the core of the business is active traders. Like, it's what has generated a bulk of our revenue. It's where we had a sustainable technology advantage. And we had kind of ignored that market during COVID. We were focusing on the new investor market. So we weren't really looking at someone that trades a lot and is a little bit more sophisticated, what their needs with the product are. We were looking at, okay, how can we onboard as many first-time investors as possible and streamline the experience for them? And once they have their account funded and they're onboarded, we sort of like stop the investment so much. And so that manifested itself in this weird thing where the more active a customer you were of Robinhood and the more revenue you generate from the firm, the less happy you were with our service, which is sort of like the opposite of what you want. You want your most engaged, most active customers that are generating the most revenue to be happiest. So that was kind of the pathology, and therein lay the first goal. The first goal was we want the more active you are, the more engaged, the happier you should be with Robinhood, the more of a promoter you should be. And within a year, we actually reversed that. And that required changes on all levels of the company. Product roadmap, technology, infrastructure. We started caring more about latency and performance, customer service. And this was a tough one because basically in the past, if you were a customer that had millions of dollars in your account, you were in the same queue as every other customer, right? So you could be waiting, a really long time to get service. And we had to sort of like recalibrate our service model so that the customers that had the most money in their accounts, the customers that had the most sort of like specialized needs, they were actually getting the level of support that they needed. And that was a tough one because a lot of people say, hey, Robinhood's mission is to give everyone equal access. So, if you're a gold member, is it really fair to sort of like prioritize that person? And I mean, the obvious argument is we don't have a business unless our most active customers are really, really happy. That's sort of the foundation that drives everything. And so giving that all of the investment that it needs from all angles just was very important. So that was one thing. But simultaneously, we also didn't want to be an active trader business. We wanted to diversify the business. And also we saw an opportunity for us to do more than just help people with their discretionary trading. And that's where we launched the high yield product, where now you can get up to 5.5% interest on your cash. And that's, we announced a recent number where $20 billion had entered that product since it started. We launched our retirement product, which, I mean, in my opinion, just from the economics and the user experience, it's the leading retirement product. So you get a built-in match, which you had to have an employer-sponsored 401k to get in the past. And it's the first retirement product, to my knowledge, to win a design award. So it's just like applying the Robinhood recipe from active trading into more passive products. I think the credit card is just an extension of that too. We launched a credit card, 3% cash back on all categories. You can't get anything close to that unless you're a high net worth individual at like a Fidelity. And even then, they won't give you a solid gold card. That's unique to us.
But even with those efforts, the average account size is so you have. I think you get a lot of credit that you deserve for helping democratize finance and investing. Yeah. Because if you look at the numbers, your average age is 34 versus 59 for a typical brokerage. 14 to 16% of your users are Black or Hispanic versus 4 to 8% is a typical. But the average account size has been stuck at like 5 to 7K for a couple of years now. So that kind of leads you to believe, like, are these users too young to really make a big business to grow into the leading person, the owner of all the wallets? How are you going to unstick that? And I'm also curious, like, you are probably the person you would love to have on Robinhood. How much of your accounts are in Robinhood themselves? Do you have more than that 5 to 7K? Personally?
I do, yeah.
But are we talking like is like 80%? Like, I mean, what's the optimal and what's yours?
Well, my situation is a little bit different because I can't really trade just because, yeah, it's unfortunate, but like at some point I stopped being able to use my product for equities. Of course, I can hold ETFs and crypto and things like that. But yeah, the lion's share of my worth is in Robinhood stock. That's like.
But to my point is being that like people like there's a graduation risk, right? If you have a play account sort of that's Robinhood, you might be in like Chase or something that's more established. That's a legacy firm. So how do you get over that? Yeah,
I mean, my aspiration over time is for people like me also to have all of their wealth in Robinhood. And that's sort of like the sort of like upper end of the market, right? The folks that are working with family offices and they have private wealth managers. I think to a large extent, that's what Robinhood Gold is. Like Robinhood Gold.
That's your subscription product.
Yeah, long-term aspiration is to replace your wealth manager so that anything that you can get as a high net worth individual from a wealth manager and a private banker can be accessible to anyone at a price point of around $5 a month. So that's the goal. We obviously didn't start there. We started sort of like mid-market, but we have been moving up. And for example, if you look at the credit card, it's a premium credit card. It's my primary credit card that I use for all of my spend. So I think over time, you'll start seeing us moving more up market. And the average account size has been increasing. If you look at assets under custody and deposits onto the platform, that's been growing at 40% year over year, much higher than all of our peers. And granted, we're much smaller from an asset base, but one interesting stat, if you look at millennials, there's more millennials on Robinhood than Schwab, Fidelity, E-Trade, and Vanguard combined. And what we believe is over the next few decades, there's going to be a massive wealth transfer. It's starting to happen, but it's going to accelerate, of trillions of dollars, tens of trillions, from baby boomers to Gen X to millennials. And I think Robinhood can be the largest beneficiary of that, and we're putting ourselves in a position to do that. So we're making it really, really easy to transfer your account to Robinhood. From a user experience standpoint, incentives and feature set, we're expanding to all sorts of products. And so I think we'll have that tailwind, and we already have the relationships with these customers. And I think that as they get wealthier, as they inherit more of the generational wealth, and as we add more products, I think those trends should not just continue, but accelerate.
So you own your full tech stack, soup to nuts, and there's two trends that you think are really going to transform the industry even further, AI and crypto, and you've been making some acquisitions in those places. I'm curious if you could just talk a little bit about how you think they're going to be really transformative, and how are you preparing Robinhood to capture that, to become the place that all the millennials are putting all their money in the future?
Yeah, I'll start with crypto. I think when a lot of people hear crypto, they sort of like gravitate towards meme coins and speculation. And I think there's a part of the crypto markets that's that certainly, and it draws a lot of attention. But I think what we have the benefit of seeing, because we sort of like have both of these businesses, right? And we can see them side by side, and we now can look at crypto in the EU, brokerage in the UK as well, is the cost of running a crypto business is like an order of magnitude lower, because you get to leverage so much of the public infrastructure, and these public blockchains do a lot of the heavy lifting when it comes to settlement and transactions, that there's just like a obvious technology advantage in putting more and more stuff on that infrastructure. It's kind of like going from mainframes to on-premise to cloud. I think the next transition for financial services will be more and more of these things are going to go on blockchains, and more of what we consider kind of traditional financial products will be traded and custodied on blockchains as well. And you can, to some degree, see this with dollar stablecoins overseas. The bulk of transaction volume on crypto rails is dollar stablecoin right now. And the reason is overseas, people want dollars, and the easiest and most straightforward way to get them is through some of these stablecoin products. And you don't have to squint too hard to imagine a world where stocks are on blockchains and are tokenized. Other assets like fixed income are there as well. And there's like a view of crypto as a technology layer that's going to be really accelerated once people understand that there's just like a huge efficiency advantage. And so I think that's interesting. I think that'll become increasingly clear, and Robinhood can be a leader there. And then AI also has the potential to fundamentally change financial services. And I think what you're going to start to see in the near term is customer support, which is a gigantic and deep market, which is kind of one major way in which consumers engage with financial services providers. You're going to start to see that increasingly done by AI. And on the other side of the spectrum, you have private wealth managers. And I think in the future, private wealth manager, private banker, investment advisor, those will all be AI enabled. And I think that's going to be a hugely transformative force, and it'll lead to more people being able to access these services that otherwise would be reserved for high net worth individuals.
Awesome. Well, Vlad, we look forward to continuing on your journey and watching you in action. Thank you so much for being with us here at Brainstorm Tech.
Thank you. Thanks for listening.